Real estate has been one of the greatest vehicles for increasing wealth. According to Forbes, real estate was the primary wealth creation vehicle for 215 out of world's 2,755 billionaires. So do you want to start investing in real estate but are not sure on how to navigate through the challenges that come with it? Which can be finding an initial capital for down payment, raising interest rate, managing tenants, finding a really good real estate agent, managing contracts, and so on. So if you don't want to be involved with any headaches related to real estate investing or just want a hands-off approach with investing in general, then you should certainly take a look at REITs. Hey everyone, this is Nikhil Moyer, your frugal investor, and welcome to my channel. Here we talk about personal finance and investment in general. So if you haven't heard of REITs or real estate investment trust, which are basically companies that own or finance income producing real estate across a range of property sectors. And these companies are listed on stock exchange just like any other publicly traded company which you and I can easily buy in. So when you invest in REITs, these companies go and buy a rental property on your behalf. And once these properties start producing income, you as an investor get paid in terms of dividends. By law, these companies have to pay 90% of their profits to the shareholders in form of dividend payouts. And besides consistent dividend income, REITs have several different benefits, especially during inflation as property rates and rents go high. Alright, that being said, here are top 3 REITs that you should definitely consider investing in. Number 1 is NLY, Annaly Capital Management Incorporated, which is one of the largest mortgage real estate investment trust and is currently trading at $6.42. They have $76 billion in assets with 1.60 earnings per share. They pay out a dividend yield of 13.71%. Which means if you would have bought 100 shares of NLY at the beginning of this year, which would have been worth around $800, then you would have received $22 in dividends in March or $88 by end of the year. Next one on the list we have is NRZ, New Residential Investment Corporation. They are one of the leading providers of capital and services to the mortgage and financial services industries that have proven track records of returns and performance. NRZ is currently trading at $10.40 and they have over $39 billion in assets, which includes residential loans and properties, mortgage servicing rights related to investments, as well as loan originations. They pay out a dividend of 9.62% annually or 25 cents each quarter. Which means if you would have owned 100 shares of NRZ at the beginning of this year, which would have cost you around $1,000, then you would have received $25 in dividends in March or $100 in total by end of the year. And at number 3, last one on the list is VNQ, Vanguard Real Estate ETF. VNQ is widely diversified real estate investment trust focused ETF managed by Vanguard. This fund is the largest real estate ETF with $86 billion assets under management. It's currently trading at $103.94 and has a really low expense ratio of 0.12%. They also pay out a dividend yield of 3.53% annually. Which means if you would have owned 100 shares of VNQ at the beginning of this year, then you would have received $57 in dividend in March or $200 by end of the year. And there you go guys, these are the top 3 REITs that you should definitely consider if you're looking to diversify your portfolio. Please drop a like on this video if I did provide you any value today, and consider subscribing my channel if you want to learn about personal finance in general, and see you in the next one.